Indiana Success Happy Hour Real Estate Edition. Take
what?
I don't know. I don't know.
Hey, everybody. Welcome to yet another episode of Indiana Success Happy Hour. This is the Real Estate Edition. Brian Quinlan here from Daniels Real Estate.
Nest Mortgage, Brad Niccum.
That's an odd way to introduce yourself.
It just came out that way.
All right.
I haven't been drinking.
Okay, yet.
I know.
I mean, your glass is actually empty.
Clean.
That's
empty,
rare.
Dry.
All right.
No bugs on it.
Well, while I talk about my beer of choice today, perhaps you should open this new bottle of yours.
Okay.
Give you a little time here. So I have, courtesy of our friends at Sun King, Oktoberfest. Now, this is being recorded the last week of August. And of course, you know, pumpkin spice season at Starbucks. And I don't drink Starbucks. And if I did, it wouldn't be pumpkin flavored. But a lot of people love that. They live for that. And Oktoberfest is a very popular beer at this time of year from many breweries. For whatever reason, Oktoberfest is celebrated in September. And so they released their beers. And actually, when I was talking to Kevin at Sun King, he said this is his absolute favorite beer that they have. To the point where he gets a keg of this because he likes it so much. So I had not had an Oktoberfest before. It is a little darker than I'm used to. For those of you who watch the show regularly, this is definitely darker than what I normally drink. But we might have to have a doctor conversation. And so I was like, well, let me try it out. And I did, and I really enjoyed it. So we're just expanding my repertoire of beers.
Maybe there needs to be a keg here at the podcast studio of that one there.
Well, we still have one keg we're working on. And by what we're working on, I mean me. Unless Blake is coming over drinking some of that beer.
Blake comes over, but he has me switch it to the Coors Light still.
Does he really?
Yeah. Get rid of that one.
All right.
We have a party coming up.
We do. Yeah. Well.
Big deal. Maybe
we'll invite Kevin and tell him to bring a keg with him. That'd be great.
You know what? We probably need to talk to him anyway, since it is a fundraiser.
Absolutely.
I think that'd be fantastic.
All right. Well, now that your tequila is poured, what you got?
I got Tesoro Azul Tequila.
All right.
This is a new to me. It's a fairly new brand from what I understand. It's Mexican owned, Mexican produced, of course, right? Can't produce.
Not tequila if it isn't.
And it is owned by a very famous Mexican singer. So it's a Mexican celebrity tequila. And I believe his name is El Buki when you look him up like on his Instagram and Facebook.
Sure.
I believe it's Antonio or something.
Great.
Yeah.
So this is a blind taste right here.
Blind taste, yeah.
Wow.
This is
interesting.
First time. Yeah, Nam.
Okay.
Let's see, Nam. I forget what it is. I remember earlier, but Nam 1416.
Okay. Do you know what tesoro means in Spanish? I did have to look it up, so I'm throwing you under the bus here.
I believe it's a bull.
It is not.
Okay, what is
That's toro.
Oh, yeah. Toro.
Tesoro is treasure.
Huh?
And then azul.
Blue.
So blue treasure.
How about that?
Yeah, there you go. Which makes sense because agave is considered a bluish color, right? Yeah.
So whenever you're making tequila, it has to be the Weber Blue Agave, right?
There we go.
That
the blue treasure. That makes a lot of sense. Well, here we go, sir. Cheers. Welcome to the show, everybody. Oktoberfest. Do you ever attend any Oktoberfest functions? They're all beer related and pretzel related, neither of which works for you and your gluten issues.
And it's the beginning of the death of summer.
Oh, well, okay.
That's what I call fall.
I never heard it referred to that way, but that makes a lot of sense.
Yeah, I mean, it has to be. Winter is dead.
Okay.
Spring is the birth.
Okay.
Summer is beautiful. October's, the nursing home.
Wow. Well, that's bringing the show down. How's your tequila?
That's very good. It's got a nice flavor to it. There'll be reviews coming soon and an interview with the owner.
Spectacular.
Yeah, it's a lot of fun.
All right. Well, recently, we haven't recorded in a couple of weeks because you were once again down in Mexico.
Yeah.
How was your trip this time?
This was really interesting. One, we We didn't go straight to Guadalajara like we have in the other trips. This time we flew into Puerto Vallarta, and we funny thing, we've talked about the lowlands versus the highlands. And if they call tequila that's at 1,609 meters,
Okay.
which is Denver's at 1,604 meters.
Okay.
So if they call that the lowlands, what do you call when you're at sea level?
Yeah, right. Right. Below, it's not really below ground because sea level is 0, so you're not even under anything.
So it's kind of crazy. It's
Under lowlands.
So that's why I don't call it that anymore.
Okay.
We flew to Puerto Vallarta. It's a 40-minute trip up to this little town called Sayulita. And it's a little hippie beach town.
Okay.
And the vibe was awesome. It was a town that everybody's walking around in bathing suits, or just girls are wearing just a bathing suit cover up.
Okay.
And, you're walking in and grabbing tacos or, seafood or whatever you want to eat, and drinks everywhere.
Cervezas?
Tequila.
Hmm.
You said cervezas, right?
No.
Oh, you said cervezas, and I said tequila.
And I said cervezas.
Cervezas.
Beers.
Yeah, grabbing a beer, little shops everywhere, all walkable. So small, like the streets were so small. And our drivers drive this big Suburban.
Oh boy.
And just like weaving through everything. And it's like, you couldn't slid like pieces of paper between this stuff.
Man, I'll tell you, that is eye-opening when you go to other countries and get in a car with somebody.
Oh, yes.
And it's frightening at times.
We ran into a trash truck. And I'm like, that trash truck is bigger than the road. He's like, I had no problem. And they went,
oh my gosh,
each other, pulling the mirror in. And
it's amazing how they survive all of that.
It's crazy. And so we stayed in this really cool, like 15-room hotel. Everything was beachfront with a beautiful infinity pool.
You FaceTimed me from there.
Yeah, it's beautiful.
Very impressive.
And everybody said, hey, you've got to go to the Del Mortes beach.
Okay.
And we're like, yeah, that's dead.
Dead beach?
Dead beach. And it was. So we walked through. I posted a picture of it that had all this Day of the Dead type drawings.
Okay.
We walked through that arch, and we walked through the middle of a cemetery. And then at the bottom of it, there's this really secluded little black sandy beach.
Okay.
And it's very cool. So we spent a day there, and then the next day we were picked up by James Montero, the owner of Cachasol Tequila and also Cachasol Raicilla.
Somewhere back here.
Cachasol Raicilla. So Raicilla is not tequila, but it is an agave spirit. Much like all agave spirits are mezcal, not all mezcals are tequila, right? Because of what?
Okay.
So they use 6 different agaves: Augustifolia, one that's called Amarillo, several others. I won't even try. And he took us to his experience called the Cachasol Experience, which is a farm-to-table turbana. A turbana is like a distillery.
Okay.
But a distillery has, boilers and steam and electricity and gas, and this has the sun.
All right.
So you get there, they make you a margarita, the Cacha Shade Bar. So the Cachasol, right? Cacha Shade Bar. Have a great drink, and they tell you about the 3,000 agaves planted and all of the fruits and vegetables, everything they cook is growing on the facility.
Cool.
And they walk you through the process where the, pit in the ground where they cook, and the containers where they ferment, and these old adobe built copper wood fired stills. So they have to light a fire in them and keep the fire at a certain level so the still doesn't break.
Yeah.
And then they make the spirit there, Raicilla, which is absolutely delicious. And we spent the day there, did a lot of content, and had an amazing dinner, and went back home, and then headed to tequila from there. So,
is that the one where you and Tony were chopping the agave?
No, actually.
Okay.
We went from there to the town of Tequila. It's about a 3-hour drive. The drive was very reminiscent of driving to Hawaii.
So I say treacherous.
Beautiful freeway.
Okay.
And the mountains, because you're leaving the beach and you're heading, into the mountains, and it looked like Hawaii. They were big cliff-sided mountains, and the the foliage is the same, all palm trees, and it's absolutely beautiful. 3-hour drive is 2.5-hour drive is beautiful.
It's like the road to Hana, 3-hour ride.
Yeah, but we could go. He was going 112, 65 or something. Because it's kilometers.
Sure.
Then for to Tequila, we had a great fiesta at Atanasio where we celebrated their brand new brick oven that's just been installed, and the masonry oven was pretty cool. So it was a really fun fiesta.
Another FaceTime I got from Brad.
That was impressive.
It really was. It was like Brad got invited to a family party, essentially, to celebrate the opening of, what was it?
A stone oven.
A stone oven. Hey, it's our new stone oven. Let's have a party.
Keep in mind, this stone oven is a big brick oven.
Yep.
The size of, I don't know. It's hard to say, but it's, 25 feet tall and 20 feet deep. It's a big oven, but it's also celebrating the addition of a whole nother way that they get to make.
Yeah. Probably built by hand, I imagine. Took them a while to put that up. So celebratory.
Awesome. And then the next day, Partida Tequila picked us up and took us to an agave field where Tony and I got to be jimadores. Harvest agave, and they took us through their whole process and how Partida does it differently. And we spent a day with Jimmy Salza, the 5th generation Salza family. And every day was some form of a treat that even Tony was saying, I can't believe we're getting to do something.
Yeah, no kidding.
It's like, just from talking for a year about tequila on the internet. So,
well, that being said, I'll throw a congratulations out to you. You hit 1 year of making videos about tequila, and that has blossomed into thousands of followers on YouTube, thousands of followers on Instagram. Your TikTok is over 1,000, I believe you said, but slowly growing there.
On Facebook.
Yeah, I mean, that's just super impressive. And, it's a testament to you. And I know you have a passion for this, and it clearly comes out in the videos that you make. Your knowledge about all of this astounds me every time we have a talk. And you have stuck to it partially because you love doing them. But, you also have talked to me about it being work. And so, it does takes your time. But the fact that you're putting out seemingly a video every day, that takes some discipline. So well done.
Thank you. Yeah, I hit my 10,000 yesterday.
10,000, dang, 10, on YouTube.
On YouTube and 5,000 on Instagram. So
pretty awesome.
Yeah, it's pretty exciting. And it's fun. It's really getting to meet all these people. It's amazing to say I've been doing this a year, and I feel like I have a whole group of friends that I get messaged, all week long. And yesterday I was on a sip session, and Alex Croy was the speaker, and there's 30 or 40 people on there, and as soon as he comes, like, hey Brad, how you doing? It's like, yeah, I know that guy.
And you had mentioned to me that you have a kind of an exclusive bottle that just came from one of the more well-known master distillers
in Sueño. Batch number 7. This is the oldest Blanco ever in the world.
Wow.
Because a Blanco can only be aged 59 days, 23 hours, and 59 seconds.
Okay.
And if it goes that one more second, it's a reposado.
Wow.
So usually a Blanco's aged 23 days or 45 days just to get a little oaky flavor. But our friend Jay, Tequila Jay Bear, Jay and Maddie, got with, hey Jay, they got with Sergio Cruz and Oscar Vasquez, who's the master blender of this. And they let it age for 59 minutes, 23 hours, and 59 seconds. So you can't make a Blanco older than this. It's delicious. Yeah, it's great, great stuff. There were so many bottles here when I got home.
Yeah, you said when he got back from Mexico, Brad texted me some pictures of the tequila that was here when he got home, and it was 4 pictures worth of bottles and boxes of tequila. This entire bar covered in bottles of tequila. And I'm like, oh my gosh, dude, that is just crazy the amount of tequila that you're consuming and gathering.
And we go back down in 10 days.
And you're going back. Well, of course. And then after that, you're off to Cabo.
Yeah, we're off to Cabo. And then a couple of nights ago, I was invited to be hosted by Coturo 100 for 2 days at NAM 1414. So I'll be going back like 4 days after getting back from Cabo.
Oh my gosh.
And today,
It's going to make it hard for us to do the show if you keep leaving.
Today, the 24th and 25th of September. So we fly back on the 18th. And another brand is going to host me for 2 days at their distillery back in Arandas. So, yeah, it's fun.
And you're still doing mortgages?
Yeah, actually, I just finished the biggest month of the year.
Oh, good for you.
And
July. Coincidentally, August was my biggest month of the year.
July is my biggest. August is my second biggest.
Okay.
September will be the third biggest. So,
well, let's transition to the real estate world. While you were in Mexico, there was, some hubbub in the news regarding Mr. Powell and what the Fed was anticipating doing next month at their monthly meeting. Yeah.
Yeah.
So
it's been expected the whole time.
It created some stir, Brad. What were they talking about?
So first of all, whatever the Fed doesn't have direct effect on mortgage rates.
What?
Yeah, it does.
So if they raise or lower the Fed fund rate, it doesn't affect mortgages directly?
It does if you have an adjustable rate mortgage or
there you go.
So a home equity line of credit. Whenever a news person is on the news going, this week they're going to lower the Fed fund rate, your mortgage is going to go down. They don't know what the hell.
They do not.
No. In fact, if you listen to some of the financial, economic advisors that they have on, now, they're not a reporter. They're having them on the show. That's great. We need to lower the Fed fund rate. We need to lower the amount of interest that America's paying in their debt. It'll lower credit card. It'll help car loans, right? All of those things are going to be a little bit of ease. And they've been adding a little tagline quietly, but it's not a good thing for the housing market.
They keep that on the down low.
Nobody explains what they just
how about that?
And another thing to think of is we've had positive indicators that would cause the Fed to lower rates. Those positive indicators are negative for a lot of people. Unemployment's going up, right? Less jobs are being created. No more of the BLS saying 255,000 jobs created, and then 4 months later going, we made a mistake by 180,000 jobs.
That wasn't right.
And they did it, 2 times now? Hundreds of thousands of jobs taken away. So the BLS report, the last one that came out, showed that only 35,000 new jobs were created instead of the 300 they've been doing every time. So, hey, that's a good indicator that one of the mandates that the Fed has is unemployment, and they are losing a little bit of grip on unemployment, right?
Okay.
So that tells the Fed, hey, we probably need to stimulate the economy a little bit. And then another piece is we've seen inflation continue to tick down a little bit. Friday, we're going to get the PCE. I think it's the one that's up next.
Okay.
PCE is the another indicator of inflation, like the CPI. For some reason, I'm completely blank on what that is right now.
That's okay. People can look it up. That's why Google was invented.
Put it on ChatGPT. So it's really going to be important to see if inflation is stagnated or decreased, or hopefully not increased. But no matter what it does, the Fed's going to lower the Fed fund rate.
Okay.
Now, here's where mortgage rates may not like that. Like a year ago, August 2024, when the 10-year Treasury is sitting at 3.36 and interest rates were sitting at about 6.5, in some cases 6.25. The Fed lowered the Fed fund rate 50 basis points. September, we got a CPI report that showed that inflation had increased, and we also got a crazy wild BLS jobs report that showed a whole bunch of jobs were created, and the 10-year Treasury went to 4.5, and interest rates set in the 7s to 7.5s all the way until June or July of this year.
Yep.
So don't forget, they also lowered it in November a quarter.
Yep.
So interest rates went up again, right? So I don't know why people hear us say when they lower the Fed fund rate, it doesn't necessarily affect mortgage rates. The last 2 times rates went up for mortgage rates. Your car loans, your credit cards, your home equity line of credit, all of those came down. No one's buying a house with a home equity line of credit. They may be using it as a down payment.
Yeah.
So
unfortunately, what you started all that with was news people come on and talk about it. They misrepresent what it actually means. They bring on somebody who isn't specific enough. And that's what people listen to, is what they see and hear on the news. And so, plus people don't necessarily understand the differences in interest rates, because I find news organizations say they don't maybe don't use the exact words Fed fund rate. They say interest rates are coming down. And so everyone thinks that all interest rates are coming down, and they're not. They're all different things.
Right. And there are mortgages that are affected.
Sure.
Again, home equity line of credits, open or closed, HELOCs are closed-ended, or any type of adjustable rate mortgage.
Which is less popular nowadays, but there are people that still have adjustable rate mortgages.
Yeah, but it doesn't mean the adjustable rate mortgage you're going to get tomorrow is lower. It just means if you have one already, that your margin and index are going to come down because the index is going to come down and your rate is going to go a little lower at your next adjustment.
There you go.
Okay, so is it a good thing? Yes. If interest rates are going to come down any because of the Fed fund rate lowering the rates, we've already done it. They've already baked it in the pie, right?
Right.
The stock market's not going to go crazy when he does it because he already said he was going to do it. Where will everything change? If all of a sudden he doesn't do it.
Exactly.
Right? Because everything that's already baked in the punch or baked in the cake or whatever they say, right? They're going to go, oh, crap, we baked that in there or we weren't supposed to, right? So
yeah,
you'll see some changes. I think we're going to see a 50-point basis drop.
Oh, okay.
I really do. Unless our report comes out different on Friday.
I was going to say, so the intention is when he would announce this in September. At what point of September does this happen?
I'd have to look at when the meeting is. I think
Ish.
it's like the second week.
Okay.
Yeah.
So we still have
first week of them.
we still have another week or two essentially before we really find out what happens, and yeah, we really shall see.
So economically, what does lowering the Fed fund rate do?
It makes the interest paid by the country on the loans that we have lower,
Right.
Which ultimately saves money when we're talking about trillions of dollars,
But when my mandate is unemployment and inflation, why would I want to lower the Fed fund rate?
Because if unemployment is going up and inflation, I guess I'm not going to thank you. Then ultimately it's going to hopefully encourage people to go out and spend money. Right. The fact that it's connected directly to credit card rates and auto loan rates.
Yeah.
If those are lower, people are more encouraged to go out and spend money. So it stimulates the economy. Yeah. So did I just nail that?
You nailed that.
Gosh, yeah. Hey everybody, I learned something.
So why would interest rates be afraid of that? 30-year fixed mortgage rates. Why would that be something that wouldn't agree with that?
That I don't actually know.
Whenever you stimulate the economy, if you think about where we went, and keep in mind, I do have barely a ninth grade economics, high school,
sure,
acute, and plumber, because I went and graduated. But so why did we have so much inflation coming out of COVID?
Because people weren't leaving their homes and they were losing jobs. And so the cost of things shipping wise was up because, again, everybody was affected and I'm not making any sense.
You didn't nail that one.
Dang it.
You brought a hammer to a screw.
Well.
It's because we flooded the market with money.
Okay.
When you increase the money supply, the money it's no longer worth what the money was worth.
Yeah.
Everybody has more of it. So it didn't mean the prices necessarily went up as much as the value of what you had in money came down.
Okay.
Everybody had it. So, and we flooded the market a couple ways. One, in the beginning, we gave money to people, right? Yep. You're at home, you can't work, you need money. They needed money. I'm not saying that anything different should have been done.
Sure.
But if you mail,
there's consequences.
Everybody, there's $1,000 more. And what did they do with that? Was it struggling people that went and bought food? Well, not if you read some of the reports. A lot of people gambled at Robinhood, like bought crazy stuff, right?
That, or, honestly, some people paid down debt.
Right.
That's what we would have done. I don't even recall getting money. I think we probably made too much. And so,
we didn't check either.
Yeah, exactly. So I remember my children being bummed out because they were both adults at the time. I guess Will was not. He was only 16, so he might have gotten some money. But like my daughter, she was still tied to us in terms of taxes, and so I was like, sorry.
Yeah. And then the next step we did is we gave businesses a lot of money through PPE that was not didn't have to be paid back. So we flooded the market with more money.
Mm-hmm.
But the piece that really is out there is Janet Yellen and the $300 million in the Treasury that could be moved that never was allowed to be moved before they changed the rules. So that put a whole lot of Treasury money back in the market. But the Fed was buying, and you remember talking about this when we were doing this, our lives and stuff. The Fed was buying like $3 trillion in mortgage-backed securities. So that means they were buying those off the market and putting money back into the banking system, right? So now you're flooding all of this money into the banking system. And there's an index out there that you can look at. I don't recall what it's called, but it'll talk about the growth of money that's available in the market and the shrinkage of money that's available in the market. And one of those, the growth of money, is what pulls you out of the recession, but it's what creates inflation.
Okay.
And then the tightening, right? And we talked about quantitative easing,
Yeah.
right? And then quantitative tightening. Those are your two things. So tightening is taking the money out of the market. Exactly what the Fed did. They stopped buying mortgage-backed securities. In fact, they started selling mortgage-backed securities. So now they're taking money back to the Fed out of circulation. So when you're removing that money from circulation, you're making everything tighter, and you should be controlling inflation and creating unemployment, right? So those things go back and forth. So it's kind of neat when you get into that. If you want to read a great book that helped me learn how our banking system is really created by a couple of really big, rich bankers and people who have more money than they really needed. Read the book, The Creature of Jekyll Island. It'll explain what fiat money is, how our system works, how the Federal Reserve scammed the United States government into voting for and agreeing with a central bank that they called the Federal Reserve, which is just a bank that is not connected to the federal government, that is just run by a bunch of bankers, and it's just a central bank.
Wow.
And if you notice now, even Fed Chair Powell was saying in his speeches, our move of what we plan to do is exactly in line with what a central bank is supposed to do. They just freaking call it that now because enough people are educated to go, we're just a central bank.
You're just a bank.
Yeah. A big, giant controlling bank. They make sure banks don't run out of money because they loan money to banks, and the money that they loan is the interest rate is decided by the Fed fund rate.
Oh, how about that? That was there's a lot of knowledge you just dropped on everybody.
Yeah.
Hopefully,
Dom 16.
hopefully they're still watching.
Yeah, because that shit's boring.
But
so what's happened on the housing side of things since we talked about that we hope rates come down, and we hope they do?
You know, I feel like the housing market locally has been busy.
Mhm.
I believe that we've had more buyers hitting the market. You know, like we've already said, people hear about rates dropping, regardless of what kind of rates they are. They hear that and they're like, you know what? Maybe now is a good time. And I mean, I've even made a post or two about, hey, you know, rates have been coming down. They're expected to drop again next month. Now might be a good time to consider, because we've talked about before, you know, if rates get to 6 or anything below 6, we're going to have millions of buyers who are going to come flooding in the market. And while we have seen an uptick in inventory, definitely now versus where we were last year, it still wouldn't be enough if those millions of buyers, you know, I guess it wouldn't be millions locally, but still, if the influx of buyers does happen because rates drop low enough, I mean, it'll create a very busy fall. That's a good thing for me.
Yeah, I read, remember we talked about on the show, like if it hit 6%.
There would be like 3 to 4 million people, and if it got to 5.5, it would be like 9.
Like 8 or 9 million people would sell their house. Like that's not just how many people could, but how many people are in a subsurvey.
Yeah, it had to do with 1.5% was the threshold above the current interest rate that people have.
That's right.
And so lots of people right now are sitting at a 4.5% interest rate or a 5% interest rate. Well, if you add 1.5% to that, that gets you to 5, gets you to 5.5, gets you to 6. And, you know, not that we're necessarily expecting interest rates to drop that drastically. Right. You know, there are consequences when things do happen. And, you know, hey, you know what? If you need a realtor to help you with all that, I am here for you.
You know, this is a funny thing that happens all the time. My phone started ringing off the hook a couple weeks ago. Hey, we heard rates are starting to come down. Is now a good time to refinance? Yeah. Yeah, let's do it. Let's bet all your money next Sunday on who's going to win this Super Bowl, because the season is just starting.
That's right.
Like, I'd rather refinance when I've heard rates are coming down, rates are coming down, rates are coming down. Rates are coming down. Rates are coming down. Rates have started to go up. I need to refinance because I just hit the bottom.
Yeah.
Do you feel that school starting back up has at least like put the clutch in on the market a little bit?
Yes. We've had this conversation off air. It's always interesting to me how the school calendar really controls a lot of what we do. Yet there are many people that don't have anything to do with the school calendar. But, the holidays, the holidays season in and of itself, whether you have school or not, does affect real estate. But there's also the correlation that, well, now the kids are off school, there might be traveling involved, obviously seeing family and all of that. So things kind of shut down. Then we get into spring break. And here in Indiana, most schools have a 2-week spring break. That honestly shuts us down for about 3 weeks because the week before that 2-week break, people don't want to do anything. They're getting ready to potentially go on vacation. Then they come back and, well, now we got the, month or so left of school. Oh, that's when we get busy because now people are talking about wanting to buy a house so that they can move before the summer ends so they can be ready for the next school year. Well, what inevitably happens to us in about July? Things slow down a bit because schools get back into session.
Isn't it weird, though, that July was my biggest month this year?
Yeah.
August was your biggest month this year?
Now, I'll say that being said, those were deals that were started in June and closed in July.
Our Marches weren't what Marches usually are.
Yeah.
And our May definitely was what May normally was. So where, March, April, May, June are usually the biggest months for us in closings. And this year it was July, August, September. Rates delayed things.
True.
Understanding there's been a lot of fear, right? Oh, tariffs are going to, kill us all. And now we're like, okay, well, they didn't do anything. Wait, they did. They gave almost $1 trillion in revenue to the federal government that we weren't expecting.
All right.
That's a good thing, right? We figured out that maybe inflation isn't going to kick back up and things have actually come down in a lot of areas. People are, really starting to get a good grind on what's going on with the market and understand it. I think that's where PAL is as well, even though Trump has been a little heavy-handed with it.
Yeah, yes. He does not like Jerome at all.
I don't like you anymore. But now Jerome's going, okay, well, I guess what I thought was going to go wrong maybe isn't really going to go wrong, right? Still to tell, but it's been an interesting year.
Definitely. I think when all is said and done, 2025 will be one of the lowest years in real estate.
Absolutely. It already is. Yeah.
So,
and so is 2024.
Yes, it was.
One of the lowest ones as well. And why is that? Well, we have high interest rates. Homes cost a lot of money. And there's been a lot of uncertainty of what's going on.
Yep.
And it's really, I don't believe it's a political thing that we've had 2 bad years in real estate. I believe it's the fact that we stuck everybody in 2% and 3% mortgages. And you get a 6% mortgage and you get, gosh, I can't buy a house unless it's a 3% rate. Like we trained people that these rates were normal.
Yep.
And they've never been normal. Actually, the rates we're in right now are the normal rates.
Yeah.
And it's like if gas dropped to 25 cents a gallon and it stayed at 25 cents a gallon for 24 months. And then it went to $5 a gallon.
Yep.
It'd be the least amount of miles driven ever.
I often refer to it as the "what have you done for me lately" theory.
Exactly.
Because, like you said, we are in a very normal market right now, interest rate wise. We have often, granted it's been a few years, but people would talk about, oh my gosh, interest rates used to be double digits. I remember when interest rates were 10%. I remember when interest rates were 18%. The people buying a house today do not care about that. They're in the current market, and there's still so much talk about what rates were 3 and 4 years ago, because those people who bought a house or refinanced back then are living that interest rate. And so they say, oh, I don't want to give up my 4.5% interest rate. And I don't blame them whatsoever. But, those who either have never bought a house before or it's been a long time since they bought a house have to realize the 6% is really good. And if we can stick around there, that's very healthy.
Yeah. And, while people complain about rates going up, their rents skyrocketed as well.
Yeah.
And I sent you a video today of a realtor that has to negotiate with a boomer.
Okay.
And the realtor walks in the room and looks at the boomer and goes, "You're not going to believe this. We have an offer for $895,000 on your $900,000 house." And the boomer goes, "Well, I'm not giving up 5,000. What do we get? Give away 5,000 now? Then it'll be 10,000. Then it'll be 30,000. Then everybody in the neighborhood will be giving their house away for free." And the realtor's like, "So no, we're not doing that." And he's like, "So you're telling me that the house you've had listed at 900,000 for the last 3 months that we got an offer for 895? It's only $5,000." And he looked at me and goes, "Well, I ain't giving the house away." Did you like that?
It was funny. I can't remember if they referenced in there that the guy probably bought the house for $100,000.
No, I wanted to say, you bought it for one thing, a box of Cracker Jacks and 2 Dominoes.
Exactly. Yeah, that's ridiculous.
There's a lot of that too. People think that they can still sell their house for some crazy amount, even though it's still way more than what they bought it for. So
Yep.
it's a healthy market. You know what else is healthy? Our drinks.
Yes, sir.
Guzzle these down and
All right. Well, let's wrap this up. Kids, thank you so much for tuning in to Indiana Success Happy Hour. We'll see you on the next episode. Cheers.
Drink healthy, everybody.
It's Brian and Brad. Grab your seat. Real talk served with a boozy beat. Tune in, don't even blink, 'cause real estate makes us drink.